Ever notice how your social security number is required for literally everything? Bank accounts, credit cards, jobs, loans, they all demand those 9 digits like your life depends on it. Most people think it's just an identification number, and they're right. Your social security number was created to track your social security benefits and earnings, but over time it became the de facto national ID number that financial institutions and employers use to verify your identity and run background checks. Number 1. Birth certificates as vital records. When you're born, your birth certificate is filed with your state's vital records office as an official legal document. This certificate serves as proof of birth, establishes legal identity, and is used for obtaining other documents like passports and driver's licenses. It is a vital record maintained by government agencies for administrative and legal purposes, not a financial instrument. Number 2. Treasury Direct accounts. Treasury Direct is a voluntary online system operated by the U.S. Treasury that allows individuals to purchase, manage, and redeem Treasury securities directly from the government. These accounts are only created when someone specifically opens one. There are no automatic accounts created for Social Security numbers, and they have no connection to the Federal Reserve System as shadow banking accounts. Number 3. Why banks require your SSN. Banks require Social Security numbers for several legitimate purposes: identity verification to comply with Know Your Customer, KYC regulations, accessing your credit history from credit reporting agencies, and tax reporting requirements. When evaluating loans, banks assess your creditworthiness through credit scores, debt-to-income ratios, employment verification, and actual collateral appraisal, not through accessing any government treasury accounts. Number 4. Understanding credit scores. Now here's where everything starts clicking together. Your credit score isn't monitoring you as collateral. It's a tool that lenders use to assess your creditworthiness and the risk of lending to you. Every time you miss a payment or default on a loan, you're demonstrating higher risk to potential lenders, which affects your ability to access credit and the terms you'll receive. Number 5. Social Security's true origins. Social Security was created in 1935 during the Great Depression, but not as a revenue scheme. President Roosevelt designed it to address the crisis of elderly poverty. Nearly half of seniors lived in poverty with no safety net. The program was modeled after successful European social insurance programs and aimed to provide dignified retirement income and unemployment benefits for American workers. Number 6. How the secondary mortgage market actually works. When you get a mortgage, banks have several options for what happens next. They may sell the loan to government-sponsored enterprises like Fannie Mae or Freddie Mac, sell to private investors, package loans into mortgage-backed securities, or keep the loan in their own portfolio. GSEs do have conforming loan limits and standards that determine which mortgages they can purchase, but the idea that banks immediately sell all mortgages to GSEs oversimplifies a complex secondary market system. Number 7. Corporate use of Social Security numbers. Corporations rely heavily on Social Security numbers for several legitimate legal requirements. They use SSNs for tax reporting purposes, filing W-2s and 1099s with the IRS. They're also required by federal law to verify employment eligibility through I-9 forms, which often involves SSN verification through E-Verify systems. Additionally, companies use SSNs for background checks, credit verification for certain positions, and benefits administration. This dependency exists due to legal compliance requirements, not because of any collateral registration system. Number 8. The challenge of economic participation. While the Social Security system creates strong incentives for participation, opting out, though difficult, is not impossible. Living without a Social Security number presents significant challenges. Most banks, employers, and landlords require one. However, some alternatives exist. Individual Taxpayer Identification Numbers, ITNs, for tax purposes, cash-based transactions, credit unions, or community banks that may accept alternative documentation, and some employers who can verify work authorization through other means. The system creates practical pressure to participate rather than absolute economic invisibility. Number 9. Understanding financial systems. Financial literacy is crucial for making informed decisions about money, credit, and investments. While many people could benefit from better understanding how banks, credit, and financial markets work, these systems operate under regulatory oversight and public documentation. Rather than being unknowing instruments, individuals are participants who can benefit from education about personal finance, investment strategies, and how their financial decisions impact their long-term wealth building. The key is seeking reliable financial education and understanding both the benefits and responsibilities that come with various financial products and services. Understanding your Social Security number as collateral changes everything about how you approach your finances. You're not just a customer in the banking system, you're the product. The next time someone asks for your SSN, remember that you're providing access to your collateral value, not just your identity. Knowledge is power, and now you know what those 9 digits really represent in the grand scheme of the American economy.